Hello there. My name is Avi Zangirian from Zarnowski and Beer, CPA. Uh, I'd like to spend a couple minutes with you today going over corporate extensions, tax returns, and estimates. Before we get started, I just want to talk about the few topics that we'll be discussing. We're going to be discussing how to process extensions when they come through. We'll then talk briefly about how to process tax returns. We'll also talk about the new mandatory first installment process, which came into effect in 2016. And lastly, we're going to talk about processing estimates with your corporate tax returns. I'd like to just touch upon a few general rules as we begin this. Um, Obviously, there's a lot of technical details that come into effect with corporations. Since the main audience of this presentation will probably be in the co-op and condo realm, we're going to assume that everything we're talking about here refers to co-ops and condos specifically, and not every general corporation. We'll also assume that everything we'll talk about is for buildings in New York City. There are some differences and nuances for buildings that are not in the five boroughs, Long Island as one example. But again, we're just going to be talking about New York City. And lastly, we're going to also assume that the rule is that every client we're discussing is a December year end, that their fiscal year ends on December 31st of the given year. So the first topic we're going to talk about are extensions. I just like to always, I feel that it's important that if you know what you're dealing with before you have to process something and understand what's going on, it really makes the processing process simpler. So I'm just going to go through some basics with the extensions. They're general, based on our general rules. There'll be three forms that you'll be receiving. The federal form, Form 7004. The state form, which is the Form CT5. And the city form, the New York City NYC EXT. So if you don't receive any of those, then you know something might be up. So always the question that comes up with extensions is, do I need an authorization or do I not need an authorization? Thankfully, a lot of the returns that we process and the extensions that are processed and the estimates in the tax realm that are processed are all done now electronically. So the question is does the CPA firm that's processing or filing the extensions and returns for you need authorization from the client to do so? So the answer is always that it is yes. We can't do something for you that you haven't authorized us to do. With extensions, there's a little bit of a difference because the extensions don't have are not considered processing of an actual return. Therefore, this is where the exception comes in. So we ask first with an authorization, do you need one for the New York City, for the federal, and the state? So I first ask you, is there payment due or there is no payment due? If there is a payment due with your extension, then yes, you will need authorization because that will involve us making a payment for you through the software. And we cannot make a payment for you through the software without your consent and your authorization. So therefore, if you have a payment that needs to be made, you should be receiving authorization from your CPA firm before you doing so. If there's no payment done, 9 out of 10 times the CPA firm, and that's something that we do at Zarnowski and Beer, we will file the extension for you and then provide you with copies for your file. So if we did file an extension, or if your CPA firm filed an extension and you did not receive an authorization, it's probably because there was no payments due, and we went ahead and did that for you before the due date, which we'll get to in a second. It's important to know that if your extension did have a payment, that you should check the account information. We provide an authorization form, and that form will have the amount that's going to be taken out, the account number will be taken out from, and then it provides a space for you to sign. It's always important that the number that we probably have from last year, that you should check that information before you sign it and send it back. Because if you don't, and we process it, the payment might come out of the wrong building. It might come out of the wrong an account that it's been closed, and therefore you might have issues that those payments weren't made timely. After that's the case, so you've checked that the account information is correct. It's always important that the month after, when you're doing your bank rec, make sure that payment actually came out, because you might have checked it, but it still might have been wrong, or it still might have had something there that was not the right digit or the wrong number here and there. So just make sure the payment came out and nothing else happened. And lastly, just so you know, all extensions, again, with our general rules, will be due on April 15th. Okay, so that concludes our discussion on extensions. Now we're going to go to the next topic, which is the mandatory first installment. So the mandatory first installment, which we're going to use the shorthand MFI throughout this presentation, was instituted in 2016. Originally, just to give you a little bit of a background, it was required to make a mandatory first installment, which really is an estimate payment for the upcoming year when you filed your extension. Both New York State and New York City required this. It used to be on the extension form. However, in 2016, they took it off the extension form and now made it its own separate form. So let's go and talk about that. Okay, so what's the name of the form? On the state, it's Form CT300, and that files both for the state and the MTA tax. Then on the city, this form New York City NYC 300, same digits, just different prefix. So that is what's required. And like we mentioned before, it used to be on the extension form, and now it's not. It's a separate form. Now, here's some general rules with the mandatory first installment, right? Because you might say to yourself, hey, I've never done one. I've never had to file. Our accountant never provided us with an MFI. So the answer is it's not always required. The MFI is only required if the prior year tax is over $1,000. It's actually really the 2 years prior, but for simplicity for this course, we're just going to say it's the prior year's tax is over $1,000. If your tax has not been over $1,000, then you weren't required to file one. The due date, which is really why they made this form separate, is March 15th. New York State, New York City still wanted, and they haven't said this outright, but that's my guess, is they still wanted the estimate payments, those mandatory first installments, made on March 15th. And even though the extension due date got moved in 2016, the extension date was pushed out to April 15th. They still wanted that the estimates would come in March 15th. Like we've said before, it is still considered an estimate. But the nuance and the caveat with this is that even if there's no payment due, the form still needs to be filed. So if you have a tax over $1,000, even though you have enough overpayments from the prior period to cover it, and no payment is due, you still need to process and e-file that form, the CT300 and NYC 300. Do you need an authorization? And so the answer is the same as it is with the extension. Is if there's a payment due, then there's a requirement to have an authorization signed. Okay, so that takes you part of the. So now let's talk about tax returns. In these courses, we're making the assumption that your CPA firm will, number one, put you on extension by the due date, April 15th, which we just went through. Will file your MFI if it's required, and then work on your tax return later on in the year before the extended due date. However, if your CPA firm does not put you on extension and files your return before April 15th, you could disregard the previous two sessions. But let's talk about tax returns as they're the next step in the process. So again, we're just going to give you a brief overview of what you should be expecting to receive based on our general rules we discussed before. There will be 3 forms from the 3 different jurisdictions. Federal, which could be one of 3 forms, the 1120, which is a regular corporate return, the 1120C, which is a special form for cooperatives, and the 1120H, which is a special form for homeowners associations. I've seen co-ops and condos file any of these 3 returns, so you should be expecting to receive them from your different accounting firms. The next form you'll receive is the state return, which is really a combination of 2 returns the CT3, which is the regular state corporate return, and the CT3M, which is a short form, which is also from the state, for the MTA surcharge. And lastly, you'll receive the city. And there's just one form for that. That's the New York City 2, the NYC-2. Now we get into the question of what can be e-filed and what cannot be e-filed. So here's the list of forms that can be e-filed. The 1120, the CT3, the CT3M, the New York City 2, and all the New York State and New York City estimates can now all be e-filed as of today in 2018. Do we need authorizations for those forms? Absolutely yes. Anything you're filing now, this is the actual filing of the corporate return for your client. Whether there's payment or whether there's no payment, an authorization is needed. And these estimates that are referred to here at the bottom of the list of the NYC and the NYS estimates, those are going to have payments. You don't file estimate payments for the second, third, and fourth quarter if there's no payment. So those will have payments, and therefore for all of these forms, you'll need authorizations. Now we're going to talk about the ones that can't be e-filed. So the only two that I know of that can be e-filed from our general rule population are the 1120C and the 1120H. Those both need to be mailed, signed by the client and mailed in paper. Now going back again, just to repeat the same general rules that we had for the extension. If you have an authorization and there's a payment due, check that the account information is correct. And just as a reminder, the due date, the original due date is April 15th if you're filing on time. If you're extending your filing, the extended due date is October 15th. Estimates. So estimates come every quarter, or are due every quarter. We already talked about the MFI, the mandatory first installment, that's required to be paid by March 15th. But there's also other estimates that a building can make. Second quarter, June 15th, third quarter, September 15th, and the fourth quarter due December 15th. So it's important to be aware that if your client if you're receiving your tax return, or you have a client that has estimates, that when you reach these dates, that you should, just put on your antenna should go up and say, hey, I have to make these payments. I have not heard from my accountant, or have we already set these up in advance? I mean, the way we do it at our office is that when we file the tax return, we already set up the estimate payments for the next 2 quarters if necessary. So therefore, when we file it once, they're all set up automatically to go out. So if they're supposed to go out, just make sure that was all done previously. If not, then maybe check in and see with your CPA if anything's due on those dates. Do you need authorizations? They do. They need authorizations because all of these, the second, third, and fourth quarter, all will. If you're going to be filing an estimate, you're making a payment, and making a payment needs an authorization. Also important, same thing we talked about before. If there is a payment due, don't just assume that the accountant e-filed it for you and the payment the payment's going to go through, because things happened. Either digits are wrong in the account number. We've had glitches with our software, which we've had to catch, and just make sure that the payment's cleared when they were supposed to when you're doing your bank rec the next month. And reminder that there are estimates that can be made with the federal, state, and city, but more commonly in co-ops and condos, unless there's federal tax, which is not always the case, it's more common that you'll have estimate payments for both the state and the city. So I wanted to give you, as we're concluding our presentation here today, a little cheat sheet. We had our general rules at the beginning talked about that our assumption was going to be the first line, which is a year end as of December 31st, 2017 in this situation, but obviously the year could be replaced as if you watch this 3 years later. And those, as you can see, the first line, year end December 31st, the mandatory first installment is due March 15th. The original due date is April 15th, and the extended due date is October 15th. But obviously, corporations come in all shapes and sizes and different due dates. So we wanted to give you a little cheat sheet that we use here at our office for the different year ends and the different due dates. So just so you don't pull your hair out trying to figure out, is it 3.5 months after? Is it no? Maybe it's 2.5. What's 2.5? You take a look at this, and you'll be able to say, all right, I got an August 31st year end. I got to pay my MFI by November. I got to file my extension or my return by December 15th. And if I go on extension, it'll be due June 15th. So maybe print this out and take this for yourself. So we've reached the end, and I would like to thank you for listening. If you have any further questions about anything we talked about, or would like to get in many more information from our firm in terms of other practice aids or other learning opportunities, here's my contact information. And once again, thank you for listening, and have a wonderful rest of your day.